Hi there, welcome back. Still watching Market Cafe on IT. Now let's talk about the IT bellwether that released its Q4 FY24 numbers on Friday, and that was TCS. And what a positive surprise coming in from TCS, at least a beat on all fronts, on revenue, on PAT as well as on margin. Revenue came in at 61,237 crores versus 60,583 on a sequential basis. Profitability, net profit also at 12,502 crores versus 11,097. The EBIT then came at 15,918 crores versus a 15,155 crores on a sequential basis. Margins is where we were slightly surprised because that came in at 26% versus 25% on a sequential basis. So it's a beat all across whatever we were estimating here at ET Now. And even when you compare it with ET Now, TCS numbers have done quite well. Moving on, then let's take a look at trends, because the constant currency growth has grown by 1.1%. Q4 EBIT margin has also come in at 26%. Attrition has gone down, and this is also another key positive coming in for TCS over here, because this is also what their HR head, which is Milind Lakkad, also has had to say. Attrition has come down in Q4 from 13.3% in Q3, just 12.5% in Q4, and he's also said that they started their hiring drive across campuses and they're looking into fill in 10,000 jobs. So that's another positive key point coming in when you look at the TCS number. Moving on, then the total deal wins is also where we were very positively surprised, because for Q4 that number has gone up to $13.2 billion from just 8.1 in the previous quarter. Positive news coming in all across TCS. Net headcount also has reduced by 1,759 in the quarter gone by. Also, let's take a look at what brokerages have to say when it comes to TCS's number, what they're expecting with the stock going ahead at least. Let's start by looking at what JP Morgan has to say. JP Morgan says that it sees Q4, the Q4 has seen sharp margin beats as well as strong deals. Margin beats are showing that execution is going on rather well. They're showing execution prowess when it comes to TCS. They're saying that there's no change in the demand environment. Margins have some scope for expansion, and they see relief also rally coming in for the stock as well. Moving on, then let's also take a look at what Goldman Sachs has to say. Goldman Sachs maintained a buy rating, and they have upgraded their target to 4,350 as well. And Goldman Sachs believes that the estimates are broadly unchanged from its previous estimate coming in. They expect the earnings per share, the EPS growth, to outpace the revenue growth going ahead. So that's one to watch out for as well. And neutral to positive read-through for the sector, for the entire IT sector, is what Goldman Sachs is penciling in. And probability of a double-digit earnings growth in FY25 is what Goldman Sachs is penciling in when it comes to TCS. Moving on, let's also take a look at what CLSA is rating. They've maintained their underperform stance on the stock. The target earnings was 3,940 per share, which they've now gone ahead and hiked to 4,043 rupees. CLSA is saying that strong order book is good, but it's not enough to drive optimism. BFSI, high-tech and communication remain suppressed. They've cut the EPS estimates for FY25, FY26 calendar year by up to 2.5%. So, well, that's a slight bit of a contradiction coming in between CLSA as well as Goldman Sachs brokerages. They say that the delayed macro revival and lack of management confidence is something that is hindering their outlook on TCS going ahead. When it comes to Bank of America, then let's take a look at what they said. They've maintained their neutral stance on the rating, and they've gone ahead and cut the target price for TCS, despite these results coming earlier at 4,125 rupees per share, now at just 4,040 rupees. And what Bank of America has to say, that calendar year 24 headed for a slow demand uptake. They expect 6% constant currency growth in 2025. They say that soft demand hasn't led to a pricing war yet. Steel intake to be a key differentiator when it comes to the other players of the IT pack. For Nomura, then moving on, Nomura is saying discretionary demand visibility remains low. Modest missing growth, but strong margins is what Nomura is saying, and what Nomura is pointing out, standing out for a key positive for them as well. Near-term growth visibility remains low. Not many levers for margin expansion except for growth is what Nomura is saying. ICICI Securities, they're saying that TCS will perform better versus peers with respect to margins, and they expect the company to gain market share going ahead. Lastly, JM Financial have lowered the FY20 revenue estimate to 5.8% versus 8%. So that's a big cut coming in from JM Financial as well. But they have increased the margin estimate by 10 to 30 basis points. They have a hold rate a whole stance when it comes to this stock with a target price of 4,150 rupees. So, well, mixed views coming in from brokerages, but on the back of the result that TCS has reported on Friday, let's see how the stock opens today, and we'll obviously be talking to the management today over the course of the day as well.
If you like this video, then like, share and subscribe to ET Now.